Good morning everybody, welcome to Stockradar Stocks in the Move for another week. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, still feeling refreshed from my holidays, which is good because the market's been pretty tough, although we have got some nice swings higher at the moment, which we'll look at later on. I do have a special offer coming up for you later on in June. I'm going to talk to you a little bit about that later on for new subscribers, so don't miss out on that. What do we do in a tough market? We preserve capital. That's what it's really important to do, so it's important to heed those stops, okay? Follow your trends, take your new highs, and stocks showing independent strength. And I'm going to talk about a couple of those today. There are stocks that just seem to move with their own mindset independently, and they're the ones that can watch because they've got their own power behind them. So there are stocks out there trending nicely, as I mentioned. The tech wave has been going quite well. Had a little bit of a blip last night, but it's looking quite good. So some of those stocks are going quite well. I know everyone is talking the market down. I only report what I see, not what I think. So it's important to know that, because our thinking is a dangerous part. What we see and what is actually happening is the most important thing. The beauty of charts is we can get a quick assessment, which is a really easy thing. A trend is up or it's down. We follow the price. I got my special t-shirt on today. The price never lies because it doesn't lie. We don't predict anything. We just follow the prevailing trend. So no forecasting, no predicting, just following what's there. And when trends are there, they usually are very rewarding. Okay, I have a new offering, my portfolio service for those who are looking at it. I know I have two setups, the trend reversal and new highs. If you want to just take new highs or just want to take trend reversals, that's fine by me. New highs tend to be momentum type trader, and they tend to be a little bit different to the trend reversal, which is the buy and weakless trader. There's two very clear types of traders in this market, in any market, and that sort of defines the two of them. So if you want to just focus on the momentum or focus on buy weakness, then that's okay by me. Which one do you prefer? It's up to you. Okay, now don't forget our blog, which is full of articles on discipline, processes, probabilities, portfolio management, psychology, good books to read, and of course managing your risk and minimizing your losses, which is what we're talking about today. In this week in Trading Tactics, again, I'm going to talk about getting educated. It's a really important part of it. Know your business. Knowledge is power in this game, and power is very, very important to know what you're doing when you're trading the markets. Okay, so let's get to the markets. Well, firstly, we'll go to the top 10 trend intensity ratings for this week. And there's a lot of ETFs in there. Nasdaq, tech ETFs. And a couple of other ETFs there. We've got WiseTech, AGL, Boral, Corporate Travel, and Gold Road also in the top 10 there, all doing okay. So there are plenty of others in there, but they're the top 10 as we see them at the moment, and we'll focus on some of the techie stocks a bit later on, WiseTech being one of them. Okay, so that's your top 10 for the moment. Let's have a quick look at the markets. Firstly, the Dow Jones, which we know let me just size this down so we're not going to bother us too much. There we go. Okay, so let's just now go back to the Dow. The Dow Jones. Okay, so the Dow Jones, which we can see, this one really, since it's high, has got lower highs in there. So, it's not really, really big lower highs, but there are certainly here, these rallies they're getting shorter and shorter and just failing each time. We've got another one this week, which seems to be failing again. And the volume here is pretty mixed on the Dow. So it's a very different picture to what we saw previously when the tech index was going down. The Dow didn't go down nearly as much as the tech, but now it's struggling on the upside. So that's it for the Dow. It's still what I would call in a downtrend really, and we're really looking to pressure this point here, and then S1 down here is what I'll be looking for on the Dow, which is not such a good look. But then we go to the S&P 500, and we see a slightly different picture here. We're getting a bit of an uptrend here of higher lows, which is an interesting situation. I can't explain everything to you, but I just report what I see, as I said before. So we're trying to get through here. We've got through this first little bit of resistance here. Now we need to clear this one up here around 4,300. If we can do that, then the market may well have a shot at the highs, which seems strange, but how bad is the recession? Well, we don't really think it's that bad over there. I think things are humming along pretty well. So there's a bit of buying here. This recent rally here, momentum's okay. It's above the average. So all in all, the S&P 500 looks far better than the Dow. Okay, now let's go to the Nasdaq. It's even better looking because the tech index came down further than everything else and is now recovering back up. And we're seeing some beautiful buying in this tech index. I know Apple's making new highs. Momentum is good. It's above the average and it's looking pretty good. So all indications are that this may well be looking to start pressuring a move back towards these highs, which is a very, very important step for this market if you can do that. Okay, so that's the Nasdaq. Now we go to the commodities index, and gold is just struggling up around here. It hasn't really failed, but it's certainly having a lot of trouble. This is the third attempt we've had since in the last couple of years to try and get through this 2000 level, and it's failing again. We've got support levels down here that will really suggest we are failing here. At the moment, we've got some pretty heavy selling here. The market is holding up, I admit, so that's not such a bad thing. So there are some bulls out there. Momentum sagged a bit. We're just sort of above the average, so we've got a bit of a mixed picture at the moment on gold. So I'm just sort of a bit wary of gold until we start jumping through here up above 2000 or 2030 up there. Okay, copper, it's on the slide again. It's not doing all that well. You know, we've got these lower highs here, 1, 2. We're now pressuring this area. S2 down here is really our target. The trend is down. There's not a lot of buying here. The sellers are trying to get a hold of this market. Momentum's falling flat there. So Dr. Copper is not feeling very well at the moment, and it probably needs to go to bed for a little bit longer. Okay, Brent crude, well, you know, it's stubborn here. The trend is down here clearly, but, you know, since probably December, we really haven't made a significant new low. So it's probably quite encouraging there that the support is there, but I've got no real upside indications at this stage. We need to get through this moving average and this downtrend line and this little resistance level up here before we'd even think about a move towards R1. So Brent crude is just stuck in this range at the moment between about 75 and 85, really 88. So that's Brent crude. So that's your overseas markets and your commodities at the moment. We can now have a look at the S&P ASX 200 index, which is, well, you know, it's it's the big point is this resistance level at the all-time highs here, 7629, and I've just got here. This is proven to be a major resistance level, but when it does break, that's exciting. So that's the good thing about a resistance level. It is failing. It's not drifting down. We have got a sort of a lower high sequence here, which is probably going to pressure S1 and maybe even S2 at some stage. But eventually we will go through this high here, and when it does go through, we'll be jumping all over lots of stocks then, I would think. You know, the main thing really is at the moment, I'm going to mention later on, there really is a big fat brick sitting on top of the big miners and the banks at the moment, which is stifling this ASX 200 completely. So under the hood is where we make our gains. And for the momentum index, it's really sliding back to neutral. As you can see, it's pretty well been stuck in this range for for a couple of years now. So we just have to really wait and see which way it's going to break. Eventually it'll break up, but we'll just have to wait for the timing on that one. Okay, so I'll just go quickly now to the portfolios for you. So the S&P, the stock pick update now is actually up 1 to 54, so it's really gone nowhere for the last few weeks. We've lost a few stocks, we've picked up a few ETFs. So the stock pick count on stocks is down to 45 of 160, and the ETFs is up to 9 of 23. So that's where that's sitting there. So the stock pick count overall has not gone anywhere, but stock picks are lowering and ETFs are picking up. On our portfolios, as I said, we're really in capital preservation mode. We're really not going anywhere for a while. Admittedly, the conservative portfolio has picked up a little bit to 8 out of 20, which did a couple of weeks ago. So we're 40% equities there. It's doing 8.4%. It's actually picked up a little bit lately, which has been quite good. The Energizer 5 stock, our flagship portfolio, is still at 17% and is flat at the moment. We're 100% equities in there. We've got 5 stocks we're holding at the moment. So that's still good. So, you know, we're trying to make some money here if we can. And the Energizer 10 is also 10 out of 10, 100% equities, and it's doing 12.7 CAGR at the moment. So again, they've been pretty flat for a while, those indexes, as we haven't really made or lost any money. And the important thing is in this market again is to make sure you're not losing money, preserving capital. So when your stops get hit, and we have had a few get hit, we just get out and move on, because we are making some money in some good stocks, and I'll show you them later on. Okay, the 5 stock we've done from August 20 is still 5 out of 5. And the one from March 21 is 4 out of 5, doing 80% equity. So almost full, but not quite. But they're just hovering around, not doing a hell of a lot at the moment. So that's your portfolios for the moment. That's what they look like. Okay, so now we're getting some stocks. Last week we talked about a few trends. Telstra's been interesting of lately. Qantas has also been interesting. If you want to look at what's going on with Qantas, with Stockradar's view, go to the Trading Centre. We'll give you an update on that. We looked at Webjet, Boral, which we're going to look at again today, WiseTech and NHF. They're all doing quite well. So they're the little pockets that we've got that are strengthening at the moment. So we'll have a look at those stocks now. First off, we've got... our leading stock here we're looking at here is WiseTech. Okay, so it's done very, very well of late. It's just powering along with the Nasdaq. The trend intensity rating is 10. Since it made these new highs up here back in February, it has just rocketed from $59, $60. It is now $76. Very, very strong demand, as you can see down here for WiseTech. Its momentum is good, the demand is good, the trend is good, the average is good. Everything is good about this stock at the moment. So we don't know where it will go, but we will be on it if it keeps going higher, that's for sure. But stops must be set to maximise those gains. So with this profit here, we need to make sure we lock that in at some stage. So we don't let the market come right back to this area here where we bought it. So it's important that we set our stops, and we have our stops set, which takes any decision making out of your hands. So we're not sitting there going, will I get out or won't I get out? We must know what we're going to do before it actually happens. But anyway, WiseTech is a great stock and is doing very well at the moment and continues its long-term ride higher. Okay. So that's WiseTech is absolutely killing it. Trend reversal I want to talk a little bit about today, and we've been watching this one for a while and it's doing quite nicely, which is AGL. We've got a nice big trend reversal which has developed over about 18 months or so. The trend intensity rating is +9 at the moment. It'll probably go to 10 at the end of this week after this rally this week. The volume is quite good down here. If I can just size this up a little bit, you can see the volume is quite strong throughout this rally, as is the momentum and the moving average. So we've just bought this one with a stop, and now we just let this one run as it is. So it's doing really well at the moment. The other one I want to look at is James Hardie. Going not independent strength, it's sort of a USC stock. That stock market the Dow's not doing so well, but the S&P is doing quite well. And I don't think that market is so bad over there. And neither does James Hardie, because it started to go up again. It's broken through its resistance level. The volume has been very good. Momentum is very good. It's above the average. The trend intensity rating I've got is +9 as of last week. So this looks very good. James Hardie had a beautiful 50% correction. Remember, our opportunities table that we run in the Stockradar newsletter isolates these special stocks that correct a lot. And James Hardie got the 50% correction, and we were pretty well spot on with that one, as to it's now started to rise off that 50% level on good volume there, which looks excellent. So James Hardie is also doing very well. Other trend reversals we're sort of looking at as opportunities. Flight Centre, we can't wait for that one to look looking interesting. AGL, it's already off. Orica is still lurking there. James Hardie is off, as we know. Tabcorp came in looking quite interesting at the moment. Keep an eye on that one. And Hello World, well, what's it going to do? Well, we've looked at that one there, and we'll probably update that in the newsletter at the end of the week, but it's also been looking very interesting indeed. Okay, and on the new high basis, well, if we go to the new highs, we're looking at a couple of stocks here. Again, we're back on the tech sector again. We're not stuck to anything. We just follow the trend, and with the tech stocks, technology won the trend reversal back here in July of last year. It then went on to make a new high. It's now going on to make new highs and new highs and new highs. And so when the trend is up, so when the trend is up, the odds are that prices will be higher next week than they are this week. And for the most part, you will be right. And for the most part, here we have been right. Even though you have these pullbacks here, which haven't been all that significant, or this one did attract a bit of selling, but the buyers came straight back in and rammed the price up. It's a really good sign of demand when that sort of thing happens, okay? So technology one's a tech stock. It's doing well. The long-term trend of this stock has been fantastic, and we've had some really nice momentum moves like this one to jump on, trend reversal, new high. And since July, it's risen from about $11 to just nearly on 17. So that's not a bad gain in a fairly short period of time. So we've got our volume looks okay. Even though we have had bouts of selling, the market has shrugged them off pretty well. Momentum is still powerful and it's above the average. So that technology one is a great stock. The other one we're looking at the moment, and we looked at last week again, these are the stocks where we're making our money. So why wouldn't I talk about them? Because there's not a lot of stocks that are going up at the moment. A lot of the ones are failing. But NHF has made a big resistance break here. We can see back from late 2019, the highs there at around $8. It's now kicked through there after trying 1, 2, 3 times. This time it's gone bang through, and this time we've got the moving average ticking up, beautiful volume through here, which means there's great demand for the stock, not a lot of selling, and momentum is fantastic. So why wouldn't you buy this stock? I don't know, because that's what it says telling me. When the trend is up, as I said before, the odds are the prices are going to be higher this next week than this week. And in this case here, this has had about a 10-15 week rally without stopping, without blinking. So that means demand is very, very good for that. So NHF looks good. So, you don't need a lot of stocks in my 5-stock portfolio. I only need 5 stocks. And if I've got 5 stocks going up, I don't care what the other stocks are doing. So there you go. Portfolios are the way to go. High conviction portfolios. Okay, on the new highs, other opportunities there, we've got Medibank Private lurking. Brickworks this week, maybe. Have a look at that chart. National Storage is hovering. Cochlear maybe looks ready to me to go. Not that my opinion is important. Really want to follow the price. The price never lies, so that's what you're going to look for. But Cochlear looks ready, and CSL is building something. We can just wait and observe. And as I said before, the beauty of looking at a chart is it very quickly tells you whether the price is going up or down or sideways. Not interested. So that's the analysis we do. We don't need fundamentals to tell us what we're doing. We just need the price. It gives us an idea because the price is what we trade. Okay, so that's most of those stocks. The only other little stock I've got for you, again, we're going to go back to the tech sector, and we're going to look at this little stock here, which is called Appen, which has just had a disastrous time. It got up to about $40 and it's come right back down to about $2 at one stage. So this is the beauty of stocks, and I just can keep repeating this because when a stock goes off, especially a stock like this, which had a lot of hot air build up into it, doesn't have a lot of yield, things like that. So when your stop goes off, you've got to get out, because if you don't, you're probably going to just follow. If you haven't hit your stop, you're probably going to follow this all the way down here. If you held on here, you're probably still in here, and that's really bad luck because you're going to take a long time to recover that lost money, and that's what we hate. So preserving capital again is the issue here. So now what have we got with Appen now though? A more interesting situation. Let me just see if I can blow this chart up so you can have a look at it. At what we're seeing at the moment here, and it looks. Okay, there we go. So now we can sort of see it here. It's a little bit hard, but okay. So what we've got now with Appen is we've got this big, beautiful support level down here at about 220. Okay, we've got rotated through here. We've hit this level up here at about 330. We've come back to 220, up to 330, back to 220. This time we've gone bang through on good volume, and you can see the build up of volume here started probably back in April this year. So something might be finally happening here in Appen. So this is not a stock that I cover in Stockradar, a bit like Myers last week. I just look at a few interesting ones for you. But Appen is certainly one worth looking at now, I think, because it's certainly the demand is starting to appear, and it's come down a long way. So your risk is probably limited on the downside, but your potential on the upside is probably pretty huge, especially if this Nasdaq sets gets going. Now with Appen, I know the technology is right, but the business needs to be able to capitalise. The business hasn't been run properly, so we have a potential sell-off opportunity which has happened, and now hopefully they're getting their ducks in a row and we might see some sort of recovery there. So keep an eye on Appen, it might be a goer. Okay, I mentioned to you before about bricks sitting on the banks, and that's why the ASX is not going so well, and the big miners, they're struggling. What's happening at Qantas? Well, the trading centre, as with all stocks mentioned above and all other 160 stocks that I cover, I give you the trend intensity rating, entries, exits, stops, all updated for you every week. So get into that one. As I said before, I've got a special offer coming up in a couple of weeks. I'll talk about that in a minute. So if you want to get on board, that's the time to do it. Okay, so let's now go to trading tactics very quickly, because this is really a lot about getting educated and understanding your business. Okay, so the first thing you learn in the stock market is you can't wing it, because it will cost you. So then what do you do? Okay, then you go right back to square one, thinking it was really easy to make money. You found out it's not easy to make money, so you've actually got to learn how to do it. And it's about learning how to run a business. You know how to run your business, same with the stock market. I know how to run my business, and that's the stock market business. So it's the same thing, really. I'll get into that in a second. But firstly, stock market education. You need logical step-by-step processes to help you, to guide you so you can know what you're doing, okay, and you're not winging it. It will pay you big dividends, excuse the pun, but it will. If you do that, know and understand your business, okay? Like any business, you've got to understand it. It makes your life a whole lot easier, and it's what we do. So I'm here to try and help you and guide you, not tell you what to do all the time, but just to help educate you on what you need to do to trade the stock market successfully. Okay, so what do? We provide blogs, we provide newsletters, we provide articles, live trading center with real-time trading examples, we provide portfolios, processes, systems, a lot of psychology which we need to understand regarding managing our own state of mind when we're buying and selling and trying to shift that out of the argument, because it's important to do that, and understanding your risk. We saw the Appen chart before. You know, that's such a story that so often happens that I see that I'm still holding Appen. I bought that, I put it in my job drawer, I just forget about it because I don't really want to talk about it anymore. But you need to deal with those things when they happen, and if you do that, you'd be very glad and very thankful you did that. So stock market education is make it a business that works. Okay, how do you do that? Well, like your business, you have income in your business and you have expenses. Your income must be more than your expenses. Just like in the stock market, you have profits and you have losses. You must make your profits bigger than your losses, so you manage those situations properly, and that's how you should do it. Okay, it's no different to any business. Okay, so that's really all I've got today for you. That's trading tactics. What's happening at Stockradar? Well, I talked about last week, the newsletter came out a week or so ago, the radars ran. There's a big article on the big bias, and I really want you to read it because it's really important to understand why we do things, and so that then we can understand why we shouldn't do them, basically, and how we can fix it. It's a must read for all you traders. And I talk about the super trends in some of those stocks, the ResMeds of this world, and some of those techo stocks. Okay, so my special offer this week, which is going to come out on about the 14th to 15th of June, will be for a 12-month membership, you will get 3 months free, or for a 24-month membership, you will get 4 months free. So I'm offering you lots of free time there to take advantage of that at the end of this month. So if you're thinking of subscribing, the market will take off at some stage. It's looking okay even at the moment. There are some good stocks out there, as you can see. It's just a matter of focusing on the right ones. Okay, so that special offer is there for you coming up. I'll talk about that again next week and the week after to make sure all you people get on board and start understanding what the stock market's all about. Okay, so that's all I've got for you today. Education, make yours a business that works. Be smart and be tough. You know the decisions you should make, so you must make them. If you make them, you'll feel a whole lot better about yourself. Okay, so stay safe, watch your trends, heed your stops, give me a call if you need a chat, and I'll see you all again next week for more insights from Stockradar. Thanks very much.